Have you ever experienced a trading loss that took away more than just your money? It took your confidence. It took your peace of mind. Maybe it even took your sleep. And the hardest moment came when you looked at yourself and asked, I worked so hard. I studied countless charts. I learned so many strategies. So why did I still fail? If that question sounds familiar, then this message is for you. Because in trading, the biggest question is not how to make money. The biggest question is this: when the market knocks you down, when your account is covered in red, when fear starts controlling every decision, how do you stand up again? The truth is simple. Anyone can make money during the right market conditions, but only the traders who know how to recover from losses can survive and build lasting success today. I am not here to talk about theory. I want to talk about the reality that almost every trader keeps hidden. People love sharing screenshots of winning trades. They post green numbers, impressive profits, and stories of success. But very few people talk about the nights they sit alone after a major loss, wondering if trading was ever meant for them. I have been there too. I believed that if I could just find the perfect strategy, the perfect indicator, or the perfect setup, everything would change. I thought success was only one discovery away. Then the market taught me one of the most expensive lessons of my life. The biggest problem in trading is rarely the strategy. The real problem is the mindset of the person using it. A great strategy in the hands of an undisciplined trader can lose money. A simple strategy in the hands of a disciplined trader can build wealth over time. Before I understood that lesson, I made the same mistake that so many traders make. After one losing trade, I told myself I would recover it on the next one. The next trade lost too. Then another thought entered my mind. Just take one larger position and you'll win it all back. That is the exact moment when an ordinary loss turns into a disaster. The market does not take most of your money because of your strategy. It takes it because of your emotions. When you trade out of fear, the market wins. When you trade out of greed, the market wins. When you revenge trade, the market wins. But when you trade with patience, discipline, and a clear plan, that is when you finally give yourself a real chance to win. If you've ever tried to win your money back immediately after a loss, then you already know how powerful that temptation can be. Every successful trader has faced it. The difference is that some learn to control it, while others allow it to control them. So what should you do after taking a loss? Most people believe the first step is finding a new strategy. It isn't. The first step is to stop. Sometimes the fastest way to move forward in trading is to step away for a while. When your mind is emotional, you are no longer looking at the market objectively. You are looking at the money you lost. And the moment you start seeing your losses instead of opportunities, your decision-making becomes weaker. This is one of the biggest differences between a beginner and a professional trader. A beginner asks, how do I get my money back? A professional asks, what did I do wrong? Money is the result. The process is what creates the result. If your process improves, the profits can return. But if your process stays broken, even if you recover your money once, the market will eventually take it back again. I remember hearing about a trader who invested months of savings into the market. At first, everything went well. He made profits, his confidence grew, and he convinced himself that he had finally figured the market out. Then he started increasing his risk. Small positions became large ones. Planning was replaced by emotion. Confidence slowly turned into overconfidence. One day, in just a few hours, the market erased a large portion of everything he had earned. He was devastated. But instead of rushing to recover the money, he did something different. He opened every trade he had taken. He reviewed every entry, every exit, and every mistake. He wrote everything down. Eventually, he discovered something that completely changed his perspective. His biggest enemy had never been the market. His biggest enemy was taking trades without a clear plan. That is a lesson every trader must understand. Recovering from a loss is not about taking revenge on the market. It is about identifying the weaknesses inside yourself. Trading is like a mirror. It reveals who you really are. It shows how patient you are. It shows how much risk you can truly handle. It shows how you make decisions under pressure. The traders who learn to master themselves are the ones who stay in the game long enough to succeed. But this is where trading becomes even more dangerous. After a major loss, the market is no longer your biggest challenge. Your own mind is. After a big loss, a voice keeps repeating inside your head. How did this happen? I worked so hard. I study every chart. If I can just find one good trade, I'll get everything back. That single thought has destroyed more trading accounts than most people realize. Because at that point, you are no longer trading. You are fighting your own ego. I made that mistake too. Every time a trade moved against me, I felt like the market was challenging me. I wanted to prove that I was right. I believed the next trade would erase every mistake I had made. But that is one of the biggest traps in trading. The market doesn't care who you are. It doesn't care how many books you've read, how many hours you've spent studying charts, or how confident you feel. The market moves on probabilities. Human beings move on emotions. And when probabilities collide with emotions, emotions usually lose. After a loss, your brain wants only one thing: relief. It wants the emotional pain to disappear as quickly as possible. That is why traders begin taking impulsive positions. They increase their position size. They remove their stop loss. They average down into losing trades, hoping the market will turn around. A small loss suddenly becomes a massive one, and before long, their confidence is completely broken. One day, I asked myself an important question. If I truly want to become a professional trader, do I need to win every trade? The answer was no. Even the best traders in the world take losses. The difference is how they think about them. A beginner sees every loss as personal failure. A professional sees every planned loss as the cost of doing business. Every successful business has expenses. Trading is no different. Losses are not the problem. The real problem is taking losses that come from emotion instead of discipline. If your loss happened because you followed your trading plan, then it is simply part of the business. But if your loss happened because you ignored your rules, chased the market, or acted emotionally, then it is a warning. The traders who survive for years are not the ones who never lose. They are the ones who learn how to keep their losses small. When I started reviewing my old trades, I noticed a pattern. Most of my losing trades had nothing to do with my strategy. They came from impatience. I refused to wait for high-quality setups. I wanted to catch every move. I was afraid that, if I missed one opportunity, I would miss the money forever. Eventually, I realized something that changed the way I looked at trading. The market will always create another opportunity. What disappears is not opportunity. What disappears is your capital when you stop protecting it. The market will be open tomorrow. Another opportunity will appear. Another trend will begin. Another high-quality setup will eventually come. But your trading capital is limited. If you lose it, the best opportunity in the world will no longer matter. That is why the first rule of trading is not making money. The first rule is staying in the game. An experienced trader once told me something I never forgot. Don't make becoming rich your first goal. First, become the kind of trader the market cannot easily eliminate. At the time, those words sounded simple. After experiencing major losses, I finally understood what they meant. Before you can consistently make money in the market, you have to learn how to manage yourself. After a loss, the real test is not on the chart. The real test is inside you. Can you stay calm? Can you continue following your plan? Can you accept that you were wrong? Because the four most expensive words in trading are, I can't be wrong. The day a trader accepts that being wrong is part of the business is the day real growth begins. I eventually created a personal rule. Whenever I experienced a significant loss, I refused to jump into another trade just to recover my money. Instead, I asked myself a series of questions. Was my entry according to my plan? Did I risk more than I should have? Was I making decisions emotionally? Did I break any of my trading rules? Trying to recover losses without understanding your mistakes is like walking through the dark with your eyes closed. You may keep moving, but you have no idea where you're going. That is why so many traders become trapped in the same cycle. They make profits, then they take a large loss. They rush to recover it, then they lose even more. The cycle continues until they change the way they think. Because your account balance cannot grow consistently until your mindset grows first. You have to accept one important truth. The market is not your enemy. The market simply reflects the quality of your decisions. If you trade with discipline, the results will improve over time. If you trade with emotion, the market will expose that as well. One day, I wrote a single sentence in my trading journal. My goal today is not to make money. My goal today is to make good decisions. That one sentence slowly transformed the way I traded. Good decisions do not always produce immediate profits, but bad decisions can eventually destroy everything. Recovery never comes from one huge winning trade. It comes from hundreds of small, disciplined decisions. One rule followed, one emotional reaction controlled, one quality setup at a time. When your mind begins to recover, your account usually follows. But what happens when the losses are so large that your confidence is gone? What happens when you're afraid to even open a chart? That is where the next stage of recovery truly begins. Sometimes the biggest loss in trading isn't the money in your account. It's the confidence you lose within yourself. Money can always be earned again. A broken mindset is much harder to rebuild. I've been through the days when opening a chart brought back memories of every mistake I had made. Every candle made me hesitate. Before entering a trade, one question kept repeating in my mind. What if I lose again? That fear slowly divides every trader into two different people. One side says, try again. The other whispers, maybe trading just isn't for you. That moment determines your future. It decides whether you'll become another person who quits or someone who grows into a mature trader. The traders who succeed are not the ones who never fall. They are the ones who become stronger every time they get back up. For a long time, I believed my losses were only about money. Eventually, I realized the loss happened in my mind long before it appeared in my account. When greed took over, I increased my risk. When fear took over, I closed good trades too early. When my ego took over, I held on to losing positions. When hope replaced discipline, I ignored my stop loss. That was the moment I understood something important. Trading is not just about reading charts. It's about learning to read yourself. Understanding your own emotions is even more valuable than understanding price action. Every day, thousands of traders look at the exact same chart. They see the same candles, the same price, the same market, yet some make money while others lose. The difference is not the chart. The difference is the mind making the decision. Professional traders understand that not every opportunity belongs to them. Beginners believe they have to capture every move. That belief slowly destroys trading accounts. The biggest change in my recovery came when I stopped trying to recover my money. It sounds strange, but it changed everything. As long as my focus was on the money I had lost, every decision came from emotion. The moment I shifted my attention back to the process, everything started improving. I told myself something simple. Today, my job is not to take money from the market. My job is to become a better trader. If there isn't a valid setup, I don't trade. If the risk is too high, I don't trade. If my mind isn't calm, I don't trade. Sometimes the most profitable trade is the one you never take. Over time, I realized that control is more valuable than action. Anyone can click the buy or sell button. Very few people have the patience to wait for the right moment. That patience is what separates professionals from everyone else. One day, a new trader asked a successful trader a simple question. How do you make money so consistently? The experienced trader replied, by making good decisions. The new trader asked, how did you learn to make good decisions? The answer was simple. Through experience. Then came one final question. How did you gain that experience? The trader smiled and said, by making bad decisions. That is the reality of trading. Mistakes are not your enemy if you learn from them. Making the same mistake over and over again is what becomes truly expensive. The market charges tuition for every lesson. Sometimes the price is small. Sometimes it is painfully high. But if you learn the lesson, that loss becomes one of the most valuable investments you'll ever make. I started writing down every losing trade. Why did I enter? Why did I exit? What was I feeling at that moment? Did I follow my rules? After a while, I finally discovered my real enemy. It wasn't the market. It was my habits. The habit of chasing quick money. The habit of trying to catch every move. The habit of refusing to accept a loss. The day I began changing those habits was the day my recovery truly started. Because before you recover your money, you have to recover your discipline. You have to recover your patience. You have to recover your confidence. And remember this. Confidence does not come from profitable trades. Real confidence comes from knowing that no matter what the market does, you will never abandon your rules. That is what defines a professional trader. Beginners try to control the market. Professionals learn to control themselves. The market will never be under your control, but your entries, your risk, your position size, and your reactions always can be. Once you truly understand that, trading stops feeling like a battle. It becomes a process. And traders who trust the process eventually find consistency. After a major loss, don't ask yourself, how fast can I recover my money? Ask yourself, how can I become the kind of trader who doesn't repeat the same mistakes? That single question can change your entire trading journey. Real recovery doesn't happen when your account returns to its previous balance. Real recovery happens when your thinking changes, when your reactions become calmer, when your discipline becomes stronger, when one losing trade no longer defines your confidence. Because one trade will never decide your future. One bad day will never define your career. What matters is who you become after the loss. The market rewards discipline over time. It punishes impatience immediately. Protect your capital. Protect your mindset. Trust your process. Because in the end, the greatest advantage in trading is not finding the perfect strategy. It's becoming the kind of trader who can follow a good strategy with patience, discipline, and emotional control, no matter what the market does.